Hope you're ready to go down the rabbit hole today, everybody. I have a red pill for you. Once again, we've taken a look under the hood of all of the futures markets here using the commitment to traders strategy, and many setups have been revealed this week. The code has been decoded here using a very simple strategy. You just got to know what to look for. Today, I'm going to show you how I am determining and why I'm looking to long the euro. And this is something that needs to be clarified. First of all, is that this is not an invitation to blindly long this market. This is a setup. We're looking for underlying conditions in the marketplace that suggest a market is ready for a reversal. In this case, for the euro and several other major currencies against the US dollar, we're looking for longs, and they would be confirmed by technical triggers on the daily time frame. So without further ado, let's take a look at the code here. So the first code that I always look for, you all know if you follow my channel, I always look to the commercial commitment to trader index using a 26-week look back. And if this is not giving me a signal at an extreme, I do not proceed any further. So what we see here in the euro is that this index is giving a buy signal. What this means is relative to the last 26 weeks, the commercials are an extreme in positioning. So that's code number one. On to code number two. If we look at net positioning down here, this is the red line. This is the net positioning of the commercials. And what we see is that they are more long than they've been in 3 years. So we see that basically these peaks are important for us to pay attention to, the peaks and the troughs. When these peaks and troughs get taken out, we need to pay attention. We see the last time the commercials were this long, preceded this massive move up. We are now sitting at those levels yet again. Now, taking a look at open interest, we see there's been a decline in open interest generally. We've had multiple weeks of downward price action while open interest generally has been going down. Now, market lows are generally associated with low open interest. It doesn't always happen, but generally speaking, that is something that happens. And what's happening here is that interest in this market is low. The public is not interested in this market. But who do we see is interested in this market? We see that this decline in open interest has coincided with the commercials getting extremely long. We know that the commercials by nature are hedgers. They hedge, and they are most of the time net short. And they also account, since they're the biggest players in the game, they account for a very large percentage of the whole open interest in the market. So when we see open interest has been declining, and we also see that the commercials have been covering their shorts by getting less short, in other words, looks like they're getting more long, that's very bullish. And they would only be covering their shorts if they anticipate some sort of bullish move on the horizon. So there is code number two. Heading over here to take a look at valuation, we see right here, valuation, euro is undervalued relative to the price of treasuries, the brown line, and undervalued relative to the price of the US dollar in the green line. So that is code number three. Another code that we have is the paunch indicator. So what the paunch is if price is in a decline, and the ADX is going up over 40, basically it's signaling that a trend reversal is coming, in this case a bullish trend reversal. Now what's really unique this week, it's very rare, it doesn't happen very often, but the ADX is actually over 60, and this ADX over 60 is a significant end of trend indicator. We see it does not happen very often where the ADX gets over 60. Here it got over 60. It didn't actually have a huge downward move, but it did consolidate for a while. Here we get close to over, did we get to 60? No, we got to 56. But here's an ADX over 60, preceded a very decent multi-week down move. So we have the paunch and the ADX over 60 giving us a buy signal here. What we also see is this bottom indicator here is the rate of change. So the rate of change, basically what this means is this is a 13-week rate of change. To be honest, the 13 weeks isn't the optimal time frame for currencies. It's more optimal for the indices, the stock market indices. That being said, it still kind of works here, and I watch it. And basically, we've dipped into a 13-week rate of change buy zone, basically negative 5% change on these currencies. Generally speaking, once we get into these zones, we get close to market reversals. And what I really am excited or interested to see is if this weekly candle closes with this higher low. So what's not as important is that it dips into this area. It's once it makes a higher low that it really gives you the signal that the bottom is in. So that's what we like to see. So for example, right here, price dipped down into the rate of change buy zone, and then up here it made the higher low, and that was the confirmation that the bottom was truly in. So that's what I'm watching for here. If this closes like this week, we do have that higher low on the rate of change, which would give me another code here to suggest that this market is ready for a move to the upside. Now, heading back over here, what else do we see? We see that the small speculators, the often run public, a crowd that in the currency market we like to fade, is at an extreme relative to their last 26 weeks of positioning. And we can look at their net positioning here, and we can see that they are very, very short. They're basically the max short that they've been in the last 3 years. We see the last time they got this short was basically the week of the low prior to this massive up move. So the public in the currency market, a great contrarian indicator here. So we like that. Something else we like to look for here is to see if there's any accumulation coming into the marketplace. This is the only part of my analysis that I do on the daily time frame. So right here, you'll see that we do have some accumulation coming into the marketplace via the insider accumulation distribution index, price making lower lows while the insider accumulation distribution index is making higher lows. So that does suggest that there is some accumulation coming into this marketplace. And then we also head over here for some supplementary indicators. We see that the percent R's in the buy zone, mind you, percent R signals are much stronger when they are in alignment with the trend, and the trend is down. Now we see the 52 period moving average sloping down, so not as strong of an indicator, but still decent. Then we see the ultimate oscillator divergence has confirmed here. Actually, we had a basically lower low, higher low on the oscillator here, and we closed above this high, so that is confirmed. So that's it, everybody. That is the code. There's a lot of fundamental conditions underlying this market that suggest this market is ready for a long to the upside. To be clear, again, this isn't an invitation to just go long. We must wait for confirmation, which is via daily technical entry triggers and techniques. So if you like trading with commitment to trader strategy, or if you want to learn more, I'm your guy. Feel free to hit me up at tradiustrades@gmail.com. I can give you an invite link to my free Discord, where I will provide greater detail and insights, and we can have discussions about these markets together and help you sharpen your sword and know how to play these markets like a true professional. So I hope you found this video insightful, and have a great rest of your week, and Happy New Year, everybody. Thanks for listening.